Trade Desk stock dropped 38%. As you can see on the screen, it's trading at $55 at the time of this recording. So is it a great buying opportunity? This is what I'm going to cover in this video. Now, I've watched Trade Desk for a while now, and it always had a sky-high valuation. Recently, when it dropped to about $80, I made a post suggesting that I started a small position. The post I made, you can see it on the screen, I listed out the reasons why I started a position. Now, in the fifth bullet point, I mentioned that the valuation shows $120 price target with the reasonable assumptions case. And therefore, to get a double, I needed the stock to drop to $60 before I can add a good amount. And today, that happened. The stock did drop below $60. Now, let me show you their income statement to understand their business financials. Now, as you can see on the screen, they grew their revenue by about 19% in the most recent quarter. This is really good growth. The gross margin is in the order of 80%. That is positive operating and net income, which means the company is profitable on a GAAP basis. Now, this is very rare lately for companies of this size. Most of them are not profitable. At the bottom of this snip, we can also note they are purchasing shares back to benefit the shareholders. So the question is, why the stock dropped when the performance of last quarter was good? The reason is shown on the screen. For Q3, they guided for 14% year-over-year growth. This company usually grows close to 20%, but all of a sudden, they said 14%. This has upset the investors. However, the company added a caveat. In 2024, there was an election spending, and therefore, the revenue was higher. The company had a higher base in Q3 of 2024. Now, if we take that one-time US politics and spend, the growth is actually 18%, and this is much better. Now, let's look at the EBITDA margin. It is 39%. Let me show you the price to sales and price to earnings. As you can see on the screen, the price to sales is close to 10. This is cheap for a company like this that is growing in a high teens percentage. Gross margins in the order of 80%, great balance sheet with high cash and low debt. But still, I will show you the valuation to show the upside. Please note that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Trade Desk. Now, in full disclosure, after today's purchase, I own 50 shares at $59 cost basis. Guys, smash that like button and make sure you are subscribed to the channel. Moving on to the valuation, in the reasonable assumptions case, I assumed 17% growth. Now, due to tariffs and inflation, the ad spend has taken a hit. So it will get better once the macroeconomic situation gets better. So this 17%, in my opinion, is conservative. There are some analysts talking about Amazon being a fierce competitor, but I think there is space for a lot of companies to grow in this sector, and Trade Desk is positioned greatly. Gross margins are high, so I assume 27.5% net margin, 35 multiple. Since they are profitable and they have high cash, I'm assuming no dilution. Even though they are diluting a little bit, I'm not considering it here to balance out because I'm not considering the cash on hand. Now I see 128% gain in 5 years in the reasonable assumptions case. In the great execution case, we can potentially get a 3x. I personally think they will land somewhere between these two price targets, $123 and $174 by 2030. As of right now, this is attractive, and I am a buyer at Trade Desk at $55. Let me know what you think. Let me know what did you do with Trade Desk. Let me know your thoughts in the comments. Don't forget to like and subscribe. And thank you so much for watching.